Topic 1. AI-driven market rally is lifting semiconductors, servers, cloud, and power sectors as demand for AI and data centers boosts earnings and stock prices across the board. Samsung's shares surged on sharply improved Q1 operating profit and exploding memory demand, HBM4, etc., pushing its market capitalization past $1 trillion as constrained supply and high prices support near-term margins. AMD beat Q1 revenue and EPS expectations with data center revenue up about 57% year-over-year and raised Q2 guidance to roughly $11.2 billion, benefiting from CPU, GPU, and rack scale, Helios, AI infrastructure demand. Supermicro saw shares jump after adjusted profits and upbeat guidance, despite some legal risk headlines it says don't affect operations. Cloud and capacity demand are swelling after reports that Anthropic pledged roughly $200 billion to Google Cloud and chips over 5 years and signed capacity deals with CoreWeave and AWS. At the same time, Microsoft, Google DeepMind, and xAI expanded pre-launch model testing agreements with US government bodies. OpenAI reportedly provided GPT 5.5 to US security testers, and the combined effect is rapid revaluation of AI infrastructure firms amid supply bottlenecks, regulatory and national security risks. Topic 2. The Trump administration and the SEC proposed letting public companies replace quarterly 10Q filings with a semi-annual 10S, while keeping annual 10K requirements, as part of a rule change now open to a 60-day comment period before final SEC action. Companies would opt in by checking a box on their next 10K. The switch would be allowed only once per year and not frequently reversible. And proponents argue fewer quarterly filings would reduce short-termism, lower costs, and let management focus on long-term strategy. Critics warn the change could weaken transparency and accountability, disadvantage retail investors, and raise capital raising costs. Europe already allows some firms to report semi-annually, and a similar US proposal in 2018 failed to pass. Topic 3. Oil prices plunged about 6 to 7% on reports of late-stage US-Iran contacts and military diplomatic moves around the Strait of Hormuz, including the US Project Freedom escort operations, leaving Brent near $103 and WTI around $95 amid elevated volatility. Analysts say naval escorts help but do not guarantee normal commercial passage, while Iranian threats, higher insurance and shipping costs persist, so risk premia remain. US gasoline is about 50% higher than before the Iran war. Recent weekly increases of around 31 cents pushed the national average to roughly 4.48 cents per gallon, and jet fuel has roughly doubled versus pre-war levels, prompting airlines to cut about 2 million seats in May schedules and forcing some carriers, notably Spirit Airlines, into suspension of operations and bankruptcy processes. Negotiation progress could ease prices, but persistent Strait of Hormuz uncertainty means fuel supply and airline disruption risks may not unwind quickly. Topic 4. The Financial Stability Board warned that the fast-growing private credit sector, roughly $1.52 trillion, poses systemic risks through opaque data, valuation practices, and complex fund and funding structures, noting banks have extended about $220 billion in drawn and undrawn credit lines to private credit vehicles, and private estimates suggest exposures could be up to twice that amount. The FSB highlighted high leverage, sector concentration, and rising payment-in-kind loans as vulnerabilities, flagged specific bank exposures, roughly $20 billion for Barclays, $30 billion for Deutsche, and $25 billion for BNP Paribas in rounded figures, and recommended tougher oversight, shared supervisory know-how, standardized lending-level data, stronger valuation and credit use supervision, and scrutiny of liquidity mismatches. Bond market moves and geopolitics sent Treasury yields sharply lower on easing Middle East tensions, while long bond yields and volatility remain elevated, prompting hedge funds and large firms to rebalance positions and relocate or expand